What is going on, everybody? Welcome back to Trading Learning 101. It is July 30th, 2019, Tuesday, a little after 11 a.m. Eastern Time. Hopefully, you are all having a great day today. All right, so let's get into this recap and break out your pad of paper, your pen, because I'm about to go in on this recap. We're going to get into so many great subjects, and I'm feeling very generous today. And I just want to give you guys a lot of lessons that I've written down today and that I've seen in the markets. I don't normally do this a lot, but I'm feeling pretty generous today. I took a loss in the market today. We'll go over that. Hopefully you guys are all having a great week, like I said. So, this morning pre-market, there really was not much going on pre-market. There was one stock on the gap scanner, and that was VLRX. Really, that had my attention. And it popped up, and it fell right down to this 284 level. But if you look at the daily chart on VLRX, let me swing this over real quick. This blue line right here is the 50-day moving average, and that's right at $3. That's going to act as a resistance level. And I want to point something out with moving averages. I hear a lot of traders and beginner traders always ask the question, what are the best moving averages to use? And to answer that question, I've asked myself that question many times before. And I've heard this from another trader, and this goes from learning from multiple traders and taking away stuff from different traders and making it your own. So if you're just starting out and learning, study every single trader, write notes about how they view the markets, and if you like something, write it down, remember it, make it your own. But what I've heard one trader say was, you want to try to look at what other people around the world are seeing. So if you go to all these free websites that show you charts, what are the default settings on all of these charts? All of these free charts out there like FinViz, Yahoo Finance, TradingView, the default settings on the daily chart, they're going to have simple moving averages. And those simple moving averages, they're always pretty much going to have the 200-day simple moving average. They're going to have the 100-day simple moving average, the 50-day simple moving average, and the 20-day simple moving average. Traders, especially beginner traders, are dirt cheap. They don't want to pay for stock scanners, stock charts, or real-time professional data. So they're going to use whatever they can for free because they're just starting out. They want to, give the markets a try. They don't want to invest really if they don't know if they're going to stick with it. So they're going to be using all the free content out there that they can get their hands on. So that's just something to think about when you're going forward in your trading, and especially if you're new. I always try to keep that in mind as well. I always want to try to see what other people in the world are seeing, and that's why you'll see a lot of these stocks, when they come up to a moving average, it's going to act as either a resistance or it's going to act as support most of the time. Not all the time, but a lot of times you'll see that. Now, I only use simple moving averages on my daily, weekly, and monthly charts. I don't put them on my intraday charts because I want to try to keep my intraday charts as clean as possible. I am a price action volume trader. So VLRX, $3 resistance area. I know here in a few minutes, I think they're coming out and talking. The CEO is going to be talking, so that might pump the stock up a little bit, but this $3 level is going to be a huge resistance level for VLRX. And then this morning we had, where's that stock at? HEPA was moving a little pre-market. Every single day, 10 minutes before the market opens, Warrior Trading does a market prep. I always tune into that because I know Warrior Trading has sheep and he's a low float pumper. That's why he does those little market things before the market open. He wants to show everybody what he's looking at, all of his new sheep. That way they can all chase the low float stock and push him up in profit. HEPA, he mentioned it. I was keeping an eye on it because I knew he was going to have eyes on it. And he was looking at it at the break of this 360 level to run up to $4. So I was watching this right when the market opened. You could see right here it opened at 340, dipped down to 325, pops up to 350. That's where it ended. And it just no volume was pumping into it. You can get a feel if you're watching the tape in the level 2. If a stock has strength, there was just no volume coming into it. And everybody who got in all right here up to this 350, and when they seen that no volume was coming in, they're all going to dump it. And look what happened. From 50, everybody dumped it, and it slammed all the way down to $3. So that's another tip to keep in mind when you're in the markets. If you're anticipating a breakout, or if you're looking at a stock at an important level and you're looking for a breakout, look at the tape, look at the volume. You always want to try to tell yourself, is there supply and demand taking effect in this stock? Do people want this stock? What's going on the tape? If a stock is at a resistance level and it's just sitting there and no volumes coming in on the tape or no volumes pumping into the stock, that there's no demand for the stock. So why would it go up? You got to take notices like that, and that's when you got to make that decision. All right, there's no demand for this stock. Volume's not pumping into this stock. Get out of it or don't even touch it. And then also, I want to point out too, another tip, looking at multiple time frames. At one point, I was only looking at a 1-minute chart. I would always just look at 1-minute charts. Try to break it down and set your trading platform up to where you have multiple time frames staring you in the face, because there are all types of different people out there and groups of people that all trade different time frames. You have traders that only trade 1-minute charts. There are traders out there that only trade 3-minute charts. There are traders out there that only trade 5-minute charts, and so on and so on and so on. So that's why looking at multiple time frames, and you could see the stock confine itself to multiple time frames as well. And looking at multiple time frames, you can get a better idea of what the overall trend is. So if you're looking at the 1-minute chart and just looking at that, and you're seeing it here at 350, just simply looking at a 3-minute chart right here, you can see, let me zoom in on this a little bit. So it's at this 350 level. You can clearly see way back here it struggled at this 350 level. And that's what other people are seeing when looking at different charts. Even on the 15-minute, you see it's right up here at this 350 level. Look back right here. Look at that long upper wick right there. It failed at 370 and it slammed all the way down to 305. What happened right here? Let me get my marker out. But up at 350, right here, did exactly pretty much what it did right here and slammed all the way down to this $3 level, just like it did right here. That goes into effect of you want to try to see what other people are seeing. Use the history to help guide the future. And that's why this stuff happens, guys. It's patterns. That's all it is. This is what the smart money's doing. Look at different time frames. 1-minute charts, 3-minute charts, 5-minute charts. I got it all right here. 10-minute charts, 15-minute charts, 30-minute charts, and 65-minute charts. Why not 60-minute charts? Well, do the math. How many hours is the market open every day? The market is open from 9 o'clock to 9:30 Eastern Time to 4 o'clock Eastern Time. If you divide 60 into 6.5 hours, it doesn't add up. You're missing data. If you look at 65-minute charts and you do the math, divide 65 into 6.5 hours, it equals out. So you're getting all the data for the correct day. A little tip I learned from Brian Shannon in the book How to Read the Markets Using Multiple Time Frames. A very, very great book. I highly recommend that book. Alright, we're going to hang out for just a little bit. We got a lot to talk about today, and like I said, get your notebooks out. I'm going to be dropping a lot of knowledge bombs for you guys today. I'm feeling very generous. All I ask is you guys just hit that like button and subscribe to the channel if you're new to the channel. Join the Trading Learning 101 community. I love doing these recaps for you guys, and I love making content for you guys and just talking about stocks. Stocks, psychology, all that good stuff. Alright, next one I want to go over. EFOI. EFOI, I don't really pay attention to stocks under $2. It's not my style of trading, but EFOI is the hot stock of the day. Moving from 50 cents all the way up to a high of 90 cents. Nice moves on it today, right at the open here, at this mental level, 50 cents. Even bounces perfectly. This is why I love looking at mental areas. Look at that bounce right there at that mental area, 50 cents. Opens up, runs all the way up to 80 cents. Gets a pullback down to 62 cents. Starts grinding up, making higher lows. Up to this resistance here at 75 cents. Another a mental level. And then from 75 cents, this pops up to 82 cents, the high of the day right here when it first opened. And then it finally got over that 82 cents and pops up to 92 cents. Pulls back to this 82 cent level right here. Old resistance right here. And right here is now holding as support all right here. But it just failed, and back down it goes. But you also got to look at the daily chart. And this comes back into, I want to see what everybody else is looking at. So the moving averages. This red line right here. This is the daily chart. This red line is the 200-day simple moving average. And this 200-day simple moving average is at 84 cents. And if we go back and look at the intraday chart, here's that 84-cent level right there. The stock this morning ran up to it right there, and it ran up to it right there. And then it finally got over it right here, and then it held as support all right here. So you see now the importance of following these major moving averages. Everybody in the world knows about the 50-day, the 100-day, and the 200-day simple moving average. And majority of them have them plotted on their charts. So why wouldn't you? Now, when people get into putting moving averages on their intraday charts, I'm not too much into that. Because one, it clutters up my charts. And two, it's not really reliable. I don't want to rely on moving averages crossing over on my intraday chart. I simply want to just pay attention to price action, volume, supply and demand. I want to keep it as simple as possible. And if you keep it as simple as possible, you'll just see so much strength, and it'll just make so much sense. So much sense, I would say. That's another thing. When you're a new trader, you're always out there looking for the secret indicator that's going to make you a lot of money, that the secret indicator that only professional traders use. I hate to burst your bubble. There is no perfect or secret indicator out there. Yeah, indicators are cool. They are. They can be useful, but you got to look at them as tools to help you. First, you want to learn about how the market moves. Once you understand how the market moves and how charts and stocks move, then you could start messing around with indicators to help you with your strategies. That's all they are just tools. All right, next one I want to talk about is LXU. And LXU is a good, let's see, a good one for supply and demand and looking at level 2 in the tape. The only way you're going to get better at reading the tape and reading level 2 is just screen time. There are videos out there that you can watch. S&B Capital makes a lot of great videos on tape reading in level 2. If you don't know about S&B Capital, they have a YouTube channel. They're just awesome. They're one of my favorite, YouTube channels to learn from. I also follow them on Twitter and Instagram. They always post great content. And Mike Bellafiore wrote 2 books, One Good Trade and The Playbook. 2 other books I highly recommend you all have to read. So, LXU, let's get into this example of supply and demand and reading the tape. So, I'm watching LXU. This is the stock I took a loss on, but the setup is my bread and butter setup. My setup isn't broken. I just overlooked the market conditions we are in, and I overlooked all the signs that LXU was giving me. So, LXU opens up right at this mental level, $5 right here. way over here. Stock sells down to 470 right here. Then this moves its way up and just explodes and runs all the way up and tops out here at 575. And also, you see this wick, this candle on this wick right here. That's what we call a gravestone doji. If you're new to the stock market, you're new to trading, I highly recommend the first area you learn about are candlesticks. Buy and read Steve Neeson's Japanese Candlesticks and Beyond Candlesticks. Those are two of my favorite books of all time. I have links to them down in the description down below. And also I have links to some other of my favorite trading books. They've helped me out a lot, guys. So check them out. And who doesn't love knowledge? I love learning. So that's a bearish sign right there. This long gravestone doji candle. Stock sells all the way down to this $5 level right here. And then pops up to 510. So this is where the supply and demand comes into effect. When a stock's at a level like this, I always want to look at the tape and I want to see if there's still demand there. If there's demand, I want people to be taking the offer. The offer is the ask. That's the demand part. If traders are patiently waiting on the bid and getting filled on the bid, and every single time the stock pops up and people are not attacking the offer, then that's showing weakness. You got to think, if there are traders patiently waiting at support and sitting on the bid, and every time the stock comes down and they get filled, and when it pops up and people are not attacking the offer, the ask, you got to look at it in a sense of, if you want a stock to go up and the stock pops up, you got to look at it in a sense of other people and on the tape that gimme. They're going to take the offer on the ask. And if they keep taking the offer on the ask, that's showing strength. I'm trying to explain it to you guys so it makes sense. It is a little weird concept, but if you're getting it, it's going to make sense. But the more times the stock comes down to support and all these patient traders are just sitting on the bid, getting filled, and the stock keeps coming down, once all those traders get filled on the bid, then who else is left to buy the stock? And then that's what's going to lead for the stock to fall down, because they all got filled just patiently sitting right here, and there's not other people out there when the stock popped up buying the offer, causing for the stock to keep going higher. You guys get what I'm saying with that? So every time LXU came down to support here at $5 and $4.90, I seen all these big buyers just sitting on the bid, and they would just get filled. There was a lot of selling on the tape, and it was holding. So that's showing me that there's a big buyer sitting on the bid, patiently getting filled. And every time this stock popped up right here, no volume was coming in on the tape. People were not attacking the ask, and that's not showing strength. And when it came right back down, it ran into a surge of selling. That big buyer absorbed it all up, and it popped up again. And no strength came in on the tape. Came right back down, and then that big buyer finally got all of his shares filled, probably right in here, and that's what caused the stock to fall down. You got to take notices of stuff like that. And that goes into what I'm saying. You just got to put that screen time in and be here every day, watching the tape and watching the level too, to get a better understanding for it. Think of it as the 10,000 hour rule, guys. You practice something for 10,000 hours, you're going to get better and better and better. So this was the stock I took a loss on, LXU. I got ahead of the gun right here, and I got in right at 505. That's where I got in. This is a bread and butter setup for me. The stock ran up to 575. It pulled all the way back down to the area it broke out from. Right here. And it was also at a mental level, $5. And also, I'm not done yet. Let me bring over the daily. This green line right here, where is it at? It's at $5. So I had 3 things backing up my entry for this play. And it just goes to show you that plays don't work and strategies don't work 100% of the time. So that's what all gave me confidence to place a trade on LXU. It's just this time it didn't work out. And I'm proud of myself. I watched it. I noticed what was going on with the bid getting filled. Every time it popped up, no volume was coming into it. It came down to, I put my I don't use physical stop losses. I use mental stop losses. I said if it breaks below 490, I'm done. And right here, when it fell through 490, I sold it for a loss. I took a $125 loss from it. Learn from it and move on. Don't hold and hope for the stock to come back up and break out and retest highs. You always got to have a plan, and you got to stick to your plan, guys. I can't preach that enough. If you want to be consistent at this, you got to take this seriously. And that's another thing I want to bring up. You got to come to the markets every single day prepared. You got to have your head cleared. You need to be prepared. You need to have an open mind. You need to be in the zone. No distractions. No TV running in the background. You're not in your phone. You're paying attention to the market because you need to analyze and observe everything. You got to come prepared every single day. Every day. Because all it takes is for one trade to ruin days, weeks, or months worth of your hard-earned work. And it just messes with your head, your emotions, your confidence. It's all very, very important, guys. And remember, just because we're traders, we don't have to trade every single day. Be very, very selective about what you trade. I don't want to trade just anything. That's how people lose. They feel like they got to trade every single day. Being under PDT rule, a lot of traders hate it. But if you could trade as much as you wanted, you'd be blowing your account up every single day. So be thankful for PDT. Once you learn how the stock market works and how these stocks like to move, you'll be depositing your check every single week to fund your account. If you are not under PDT, you would simply overtrade every day. I already know it because I did it at one point. You take a loss, you try getting back what you lost, you dig yourself even deeper, you get even more frustrated, you don't walk away, and then next thing you know, you look at your P&L and you're down $1,500, and then you see you owe $150 in commissions. Just like that, it all piles up. So be very, very picky about what you trade, and just keep grinding and working at it. And also with LXU, see how it fell through right here? And then it grinded its way back on up to right here and found resistance because it was all support all right here. All right, give me 1 second. I've got a sore throat, a lot of talking. All right, SLCA is the next one. Had a nice surge this morning because they had, it's an earnings winner. They had Q2, they beat their estimates. So, SLCA, look at the daily chart real quick on this thing. See this blue line? It's right at 1150. Right here. And if you look at the chart on this, this has a lot of nice rebound plays. And what I'm talking about with rebound plays, you always want to try to look at the daily chart and get an idea of if there's any patterns that always happen. So let me bring up a good example. If I can find it real quick. You guys will like this example. Oh man, it might be under charts. It's a lot of charts to go through. I take pictures. All these are pictures of charts. All types of different charts. There was no, it's not this one. I'm gonna have to find it real quick. But don't be afraid to take pictures of charts. Take pictures of charts, write down what you see, break the chart down, save it, learn from it. But this chart right here, SMSI, I have circles all on them. When looking at the daily chart, you always want to try to see if there's a pattern that always happens. There's a pattern that happens with SMSI. Every single time, the day after it puts earnings out, like right here, you have a morning, this big doji right here. So it's showing me that the stock likes to move and it's volatile. Right here, the day after it put earnings out, long lower wick and a upper green body. That's a hammer. Right here, put earnings out. What happened? Day after, long lower wick, big upper green body. Looking at this right here and noticing traders did the exact same thing. They looked back, they seen this right here, and look what happened right there. Also right there too, but that's just a doji, but still this kind of the same candle. But with SLCA, what I see with this is it has a lot of nice rebound plays on it. Like big green candle, sell off, and then it pops back up. Sells off, pops up. Sells off, pops up. Sells off, little pop, sells off, pops. Big sell off here, pops up. So acting kind of like a rubber band. We got the 50-day moving average at 1150. This stock opens up right below that 1150 area and then pops up to 1180, pulls all the way back below that 1150, all the way down to $11. And again, this is why I like looking at mental levels right here. It doesn't have to exactly hit $11. I'm always looking at the general area, like I say, the general area. This stock pulled back to $11.09. That's good enough for me. And right here, this is what I'm talking about. This rounding bottom right there, that's showing strength. At 1109, slowly starts to curve around, and then it makes a higher low right here, just below the VWAP at 1120. And this stock explodes from 1110 and grinds all the way up to $12.30. Nice move on SLCA. And then the stock sells off all the way down to 1130 and then got a pop up to almost 1190. And then after that, it was just game over. And then the stock sells all the way back down. Look at right where it bounces at, around this $11 mental level. And then pops all the way up to the VWAP, that resistance line, at 1140. So a couple good opportunities on SLCA. It's all about how you look at the chart and view the chart. That's the only thing that counts. People see opportunities on all types of different charts. That's why it's always good to learn from multiple traders to see how they view the markets and how they view charts and take away from them. Again, going back to looking at multiple time frames as well. Looking at multiple time frames, you'll get to see, like, I don't have a good example right here. But let's say you're anticipating a breakout on the 1-minute chart. By just simply looking at the 15-minute chart, you could clearly see if you're at a big resistance level or if there's strength building up in that breakout. A good example, EFOI. That was the one I wrote down. All right. Right here. This first half right here. So the market, this is looking at it on a 3-minute chart. You see this big surge candle right here. And then if you look at the volume is just decreasing and decreasing and decreasing, going down just like that. It's consolidating. It's also making lower highs, and it's also making higher lows, forming a wedge. And then the stock finally, it's right underneath that VWAP too. And you see that candle right there? That's a doji candle. See how it all works out on different charts? It's literally like watching a drama movie. So you got that big doji right there. What are dojis? Uncertainty. It's a tug of war between the bulls and the bears. They don't know which way they want to go yet. The stock finally says, all right, hey, I want to go up. And then all the traders agree. They all jump on, and they keep jumping on and ride it all the way up. And look at the volume. Look at the volume here. Stepping its way all the way up, 1 bar at a time. Notices like that. The power of looking at multiple time frames. That right here on the 3-minute chart gives it, you could see it here on the 1-minute chart, but it's more dragged out. Compared to right here, you got your declining volume. You could just see it more clearly, is what I'm trying to say. And then you got your wedge right there. And then on the 1 minute, this long declining volume. And then the volume sidestep or just stepping up. And then just this long wedge. And also, too, that doji right there on the 3 minute. And then if you're looking at the 15 minute, you'd see right there at that 70 cents. Can't even zoom in. Right here, you know, we're at the top of that range. So people on the 15 minute could be like, yo, we're at a resistance level. And when I zoom out, I only see this big wick right here. But you zoom in on that time frame, the 3 minute, 5 minute, 1 minute, you see volumes pumping into the stock. And it just gives way and goes. And then the stock pulled all the way back down. And look at right where it's sideways action right now. That level right here. Zoom out a little bit. You see how it pulled all the way back, right to that area it broke out from. Right here. You'll see a lot of stocks do that. Alright, VGR is another example I wanted to go over. This is why I plot the previous day's close on my charts. VGR yesterday, big explosion from 11 all the way up to $12. After that, it sold off and then it closed right here at 11.63. This is what we call pretty much a red to green move. I'll plot out the previous day's close and the day's open price on my charts. This blue line is the previous day's close. The stock opened up right at that level, 11.63, and then fell below it all the way down to 11.46, and then moved its way back on up. You can see right here it was acting all as resistance at the previous day's close and at around the area it opened for the day. And you got to tell yourself, it's the mental part of it. The stock is going from being negative on the day to being positive on the day. Green. A red to green move. And this is where that explosion right here comes in. Stock explodes up over the previous day's close and the day's open. And this runs all the way up to almost $12 from $11.62. And then the stock pulls all the way back. And look at right around the area it bounced at. The area where it broke out from. And then moves its way all the way up to 11.88 so far. So pulls all the way back to the area it broke out from. Now you guys can kind of see my thinking process with LXU. Stock broke out right here, ran all the way up, came all the way back down. I looked to got in right here for a possible nice bounce up at least maybe to the VWAP test the VWAP and get over and maybe retest the highs. That's what it's all about, guys. I just broke it down to you really, really simple. It's all about developing your own trading strategy. And then OSTK. OSTK has just been a beast. Straight up beast. Hitting almost $24 today. I was so tempted to get in on this morning's spike, and I should have. Because there's a pattern that keeps happening and happening with this. We're looking at this on the 1-minute chart. I'm going to zoom all the way over here just to show you guys this pattern. Take notes, guys. Every single morning, OSTK has a morning spike. This is here on the 23rd, right at the open from 1775. This ran all the way up to $18.30. We fast forward to the next day, right at the open on the 24th. Stock opens at $18. Ran all the way up to $18.70. Fast forward to the next day. Look at that. Right from the open, $19. Stock spiked up to $20. And then ran up to $20.50. Fast forward to the next day. Little weak spike here, but right from the open. Opens at 1933, spiked up to 1970. Fast forward to today. Stock opened up at $20, spiked up to $20.50. Then it topped out at $21.20. Fast forward to today. This is today. Stock opens up. Morning spike. You see that pattern that happened over? I just showed you guys the past 1, 2, 3, 4, 5, 6 days. Every single day, OSTK has surged up right from the open. Noticing patterns like that, that's what the smart money is doing, guys. It's all about looking for patterns that happen over and over and over and over again. Over and over and over and over and over and over. That's all it is. Patterns. Your brain is a natural pattern seeker. That's why there are a lot of patterns in the stock market. Every day, write down what you see or seen. Take pictures of charts. Write notes, guys. Don't be afraid to write notes. Write down what you see and go over your notes every single weekend. PCG, another pattern breakout. Slowly making higher lows. That's a pattern right there. That's a triangle. There are patterns traders look for in the markets. Triangles and U-shapes. Those are two big patterns that traders look for in the markets. Nice triangle here, right at $18.30. This stock exploded all the way up to $19. And then here's your U-shape right here. There's another U-shape right there. PCG, nice move today. And then after that, look at it. People made their money and lost interest in it. But this is pulling back all the way to the area it broke out from. So keep that on watch. Watch, I'm telling you guys. Keep an eye on it in this area. It'll most likely probably run right back up to the VWAP. MYL. I was watching this yesterday too. This had a gap up from 1850 all the way up to 2350. Sold all the way down to this $20 level. You guys know me and my mental levels. I love my mental levels. From $21 popped up to $21.80, and this stock sold all the way down to around this $20 level right here. You could see it fell below that $20 right here and dipped down even more, but it came right back up and it reclaimed that $20. You see how it went sideways also right here at that $20, and then from that $20 runs up to $20.50, consolidated, and then ran all the way up to $21, and then grinded all the way up to $21.50. Nice move on MYL yesterday. Which reminds me, I got to take a picture of this chart and save it. Fast forward to today. Right from the open. Opens up at $20.50 pretty much. Runs all the way up to $21.50. Pulls back. Bounces off of $21. Right here. That mental level, $21. Pops up to $21.50. And then tops out here at $20.70. And then you got people who say $20, that stock's too expensive. That's why I only have $500 or $1,000 in my account. You need money to make money in the markets. And if a stock is volatile, you only need a couple hundred shares to make money. If a stock's moving 50 cents or $1 or $2 at a time, 400 shares, 300 shares, stock moves 50 cents, that's $150 you could throw in your pocket. That's the way I look at it. Alright guys, we're going on 52 minutes now, so I've done this all for an hour. I've covered everything I've wanted to cover. I hope you guys took away a lot from this video. I love talking about the stock market and stocks, and I was new once. I've been there, so that's why I do this, to try to help you guys out. I know it's a big world to learn. Just stick with it. Just stick with it. Over time, this will all make sense. You got to think. Study as much as you can right now. Just go full force. Just cram and cram and cram that brain worth of knowledge. And then a year down the road, that's when all the roads will start connecting. And you'll be like, oh yeah, I learned that 3 months ago. That makes sense with what I'm learning right now. And it just all starts making sense, guys. But that's going to wrap it up for today, guys. Also, keep in mind, tomorrow is the last day of July. July 31st, Wednesday. Thursday is the 1st of August. August is the slowest trading month of the year. So keep that in mind, guys. It's all about account preservation. All the big money is on vacation. School doesn't start back up till September. You got to think of big psychology, guys. What are other people doing and thinking? What's the big money doing? If you were filthy rich and had a lot of money, would you be staying inside and working all summer when you didn't have to? Or would you be going on vacations, having fun, traveling the world? You got to always try to think, what's the big money doing? And that's why psychology is so huge to me, guys. It all makes sense, and you could see it on the charts. You really can. Emotions and human nature never change. If you don't believe me, read Jesse Livermore's book, Reminiscence of a Stock Operator. That book is almost 100 years old, if not over 100 years old. And still the same things happen today in the markets. Alright, that's going to wrap it up for today, guys. We're approaching an hour. Great video today, guys. Great recap today, guys. Hopefully you guys enjoy the rest of your day. And until next time, have that patience, have that discipline, and study, 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 guys. Alright, later.